Hi, everybody. Welcome to this week. And what a week it has been. It has been another week of, well, red markets, falling prices, and of course, all kinds of trouble in the world of crypto. So we got a lot that we can definitely talk about tonight. Also, at the same time, I found this was not a super busy week at the same time. So it's a little bit of both. Both US and Canada having holiday weekends. So a little bit of extra space that's going on here. Now, hopefully, you guys are all having a fantastic holiday weekend. I don't know what you's got planned. I'm sure at least a few of you are probably barbecuing. Maybe you can't afford the steak, but there's always hot dogs, right? um, so we're gonna take a look at a whole bunch of different little things here today. So we'll start off first of all with the elephant in the room. So background has changed a little bit. This is the same. I wanted something different for the this week video that premiered on Saturday. So every Saturday we're going to have a this week video. It's going to be more on the commentary side. So more kind of commentary. If you haven't seen the video from yesterday, I definitely recommend check it out after the live stream. Give you a general idea of what we're looking at for the Saturday show. Now, for that show, I came up with, I developed the new look for the studio for that. And, well, obviously, this is this week, the live component. So we're going to use the same studio. That was kind of cool. A couple of other little changes. We're also going with a similar studio for the main videos in the week. Different color, but pretty much the same, but a little bit different. So you'll have to check out tomorrow's video to sort of check and see what I'm talking about in regards to that. Okay. So what an interesting week in the market. We're now at that point that we have finished Q2. So we have half a year of 2022 behind us, and what half a year it has been. For the S&P 500, it actually capped off its worst year in over 50 years. The last time it did worse than this year was all the way back in 1962. So that's not saying if you're one of these people who thinks that this year has been terrible, well, the S&P 500 is absolutely agreeing with you. So when it comes to goodness, this year's been a giant nothing burger served up with an extra side of nothing fries. So that's kind of an interesting thing. Now, one of the big trends, though, that's really interesting with this market is people are pretty much abandoning tech. Tech is hurting, and tech is going to continue to hurt. That is absolutely the way it's just going to go from this point forward. And a lot of people, when it comes to their investing, a lot of people have been shying away from tech, and they've been moving more towards their dividend stocks. So that way they're seeing a little bit of a return come in. And I think there's probably a psychological boost to that. When you're looking at everything red, at least it's nice to get dividend stocks. And I don't know about you guys, but as you guys know, I'm a huge fan of CNR, so the Canadian National Railway. And this weekend was their turn for dividends. So I got in some nice little dividends from the CNR on the weekend, and that definitely felt pretty darn good. So that's kind of the things that's going on when it comes to dividends. Now, in addition to just the market in itself, we're now the big word on the street is that recession is just around the corner. Now, here's the interesting thing. In the United States, their first quarter was negative, and just at the end of last week, they actually revised how bad it was. So the U.S. Department of Commerce came out and said it was actually negative 1.6% on last week. So that's pretty bad. Glad to see you made it, friggin' Oracle. Now, here's the interesting thing. June has been an interesting month when it comes to economic predictions on how Q2 is in the States. Now, the Fed board out of Atlanta, at the beginning of the month, they were like, oh, yeah, no, Q2 is fine. we're going to have a 1.3% increase in our GDP. Everything's great. Everybody can be okay. Well, a week later, so we're looking June 7th in that area, they come back again and they're like, well, we overestimated how good things are going to be. It's not going to be a 1.3 to the upside. It's still going to be to the upside, but it's going to be about a 0.9. Okay, so there's still hope alive. Then, of course, a couple weeks later, they came back, June 15th to be exact. Well, so I guess it's 1 week later. And at June 15th, they said, well, the good news is we don't think we're going to the negative side. The bad news is we don't think we're going to be on the positive side. So they just basically pulled out a 0. We're going to do nothing. We're going to break even. Well, that's pretty dismal. And now their latest prediction, which came out on the 30th, is that we're looking at a negative 1% growth. So that negative 1% estimate with the negative 1.6 from the first quarter, well, that would put the U.S. into a recession. You need 2 negative quarters of real GDP to be into a recession. So, and here's the interesting thing. The recession technically doesn't start once you've had those 2 quarters. Your recession technically has, technically it's begun at the 1st of January. They've been in a recession now for half a year. But now it'll be called. And these things get backdated when they do get called. So that's in the US. Now, of course, up here in Canada, we did have positive growth in our Q1. So it's going to be, and according to a lot of the economists up here, they're looking at Q2 as just squeaking by. And we're saying just like, I don't think we'll be a plus 1%. We might be like plus 0.5%. So technically, based on that, we're looking at a recession towards the end of the year. So that's fine and dandy. Here's the thing though. Anytime the US has gone into a recession in history, Canada's followed. So if the US is in recession, even if we haven't officially called it, it's going to be like we're in a recession even until it does eventually get called. And things are getting worse here as well. So it's kind of a no-brainer that that's where we're heading. Now, let me ask those of you out here in chat, do you guys think we're in a recession right now? Just a simple yes, no, or you can add as much as you want. But do you think we're in a recession? I know we're not in a recession, but I think people in general are starting to treat it like we are. Now, what does that, of course, mean? Well, one thing we're going to start seeing is we're going to start seeing layoffs. So when you hear about we've been hearing a lot about, we've got such a huge labor shortage. Well, yes, that labor shortage will probably get filled as we start laying off. And you're seeing it already in the tech sector. I know they've already put some hiring freezes on some tech companies in Canada. For example, Hootsuite is a Canadian company, and they're starting to look at. They've already frozen any hiring, and they're starting to tread a little bit backwards. So it'll be very interesting to see how that is going to happen. Now, here's one other big concern. This is kind of interesting, is that people have a lot more savings than they normally do going into a recession. So in the US right now, they predict that the savings of Americans is around $815 billion. So because everybody is so afraid to spend money, what that is going to invariably cause is you're going to see the Fed down there when it comes to their rate hikes. They're probably going to go too far, because they're not addressing that demand correctly, and people still have money that they can spend. So it's gonna possibly lead to a situation where and here's the thing though, you keep on raising rates, that, if anything, that helps a recession. It doesn't sort of null it away. So we're looking at things getting a little bit dicey with that. So that's kind of an interesting. So it's going to take the Fed a lot longer to cool that economy. And that's just the way it's going to go down in the US. So And that's okay. When it comes, of course, to inflation, we know that inflation is pretty much here to stay for a while. The big driving forces of inflation, of course, are your gas. And with gas, it's boiling down to the fact that this war with Ukraine, so Russia and Ukraine, it's not going to end anytime soon. There's no sign of that happening. So gas is going to, like right now, gas has eased off a little bit price-wise, but don't be fooled by that. It's going to continue to go up, and they are, of course, predicting it to continue to go up. And that's kind of an interesting. Now, Joe over here says that he believes we're in a recession because of persistent inflation. Yeah, absolutely. That persistent inflation is going to be with us for a while. But I think, the big thing is, of course, our GDP. The America says the economy is strong, but it's really not as strong as they think. We are in a situation where there is a lot of layoffs. Things are getting a little bit dire. And here's something, a sign of to me, this is a huge sign of inflation and recession. McDonald's up here in Canada, they have a program where if you buy some, canceling that program, which is really interesting. Oh wow! For a second, I saw a little black swirl. Like, I don't know if I got disconnected for 2 seconds. Did you guys see that at all, or was that just me? Anyway, well, besides that, it did distract me a tiny bit. So if McDonald's is starting to pull back on freebies, that the situation can't be the best out there, and I think inflation is probably hitting them as well. They're probably not able to source a lot of their products, a lot of their beef, for the same prices. So I think you're going to see. And here's the funny thing. I don't even know how much it would cost for like a cheeseburger right now, but I will bet you whatever the price is of a cheeseburger right now, it'll probably look like a deal compared to where a cheeseburger will be sitting towards the end of the year. So it's just sort of saying with that. Now, of course, also with still in regards to inflation, up here in Canada, the Ontario Premier decided, hey, we're going to give people a break, so we're going to cut the gas tax. So it works out to about 5.7 cents per liter. It's really, they made a big hoopla about it, but quite honestly, when all is said and done, you're looking at, maybe a couple $100 over the year, maybe 300-400 if you drive a lot more. So it's not really that big of a break when you weigh it against how much things are rising. And I know in the States, Joe Biden wanted to create a tax holiday, and it would be a similar situation if he could ever get it through the Senate. And I doubt he will be able to get it through the Senate. It'd be a situation where Americans would basically get $300-400, maybe $500 for them, over the course of a year, if they had this big tax holiday. And I don't even know how long he planned it to go for, but it would be a situation where it really doesn't address the issues that we're having with inflation. It simply prolongs. I don't want to say it prolongs things. It just, everything else is hurting so much that it's like taking a Band-Aid and putting it across a gushing wound. It's not going to really help much. And the only way we're going to get the gas prices under control is, one, we end that war, but that's a kind of out of our control. The only other way is to start looking at different sources of gas. In Canada, for instance, we do have a lot of gas in the West. We might have to look at, maybe start upping our production, up the production in Texas, up the production all in North America, and keep that gas within the North American bloc. But that causes other problems, and it's becomes a political mess. Now, one of the biggest issues in Canada is that we produce a lot of gas, we produce a lot of oil, but we don't have the refinery capacity. So a lot of times what happens is we produce all this gas and then we ship it to another country. Maybe we're shipping it down to the Gulf, or maybe we're even shipping it overseas, and then they're refining it and selling it back to us at higher prices. So that's kind of an interesting thing. Now Trevor says oil companies will fill the price gap anyway. Yeah. And that's kind of that situation that we're in with the oil and gas. I know there's also been talk, at least in Canada, there's been talk about windfall taxes. And it's also in Europe. I think the UK was talking about it. Where now in Canada, the only one who's been talking about is the NDP. So right now, it's not really going anywhere, and there's nothing really on the books about that. But the whole idea is that they should start while the oil and gas industry and sector is making a lot of money, we should just tax them more. I think that's a bad idea. And it's not because I'm invested heavily in them, but it's because if you were to tax them more, they're just going to pass that on to their consumers. Nobody just sort of like will take, it's like, oh, we're going to now tax you an extra 20%. No, that's going to get passed on. That's the way it goes. And eventually, as you could tax more and more your consumers, where does it end up? Who does it end up hurting? It ends up hurting the people that you claim that you are doing this for to help. And that's kind of just the way that whole cycle goes. So I don't know what you can really do about it. The other thing too is you can also hurt. You can hurt the sector a little bit, because if you start overtaxing the oil companies, it may make some people start to push off a little bit about investing in that sector. Though honestly, right now it's the only sector that's currently able to tread water. So it's not a bad sector to be involved in. Another sector, of course, which people love sometimes, is crypto. Now, crypto has had an absolute a bashing this year. Things have just been going from bad to worse, and it continues that way. Now, Bitcoin looked, the week before last, Bitcoin actually looked like it was slowly starting to stabilize a little bit. We had many days of green. It was slowly moving back up. And of course, that's now all gone, as we've now had, I think right now we're at about 8 days, I think, of red. And it's just been adding up. And I think one of the big things that happened with Bitcoin is everybody was waiting on Grayscale. Grayscale in the US was basically, they had applied for a spot Bitcoin ETF, and there was a lot of people that thought they had the best chance so far to date. Well, the SEC finally ruled this week, and they ruled no. And in doing so, it sort of deflated that little bit of wind that Bitcoin had in their sails, and that caused things to falter and things to fall. So that kind of hurt us big time. Now, the SEC, even though they have denied that spot ETF, they're now going to have to defend that decision in court, because Grayscale has clearly made their intentions that they are suing them. I do not know if legal papers have been served yet, and I don't believe they have, but that's only just a matter of time. So that'll be interesting to see how that turns out. Now, with one interesting thing with Bitcoin, where Bitcoin, I don't think it was this week, I think it was the previous week, where Gensler and the SEC said, where he basically came out and said that Bitcoin, is not a security, it's a commodity. That's a really good thing, and it does have potential. The only problem is people who are waiting to buy, especially people who are waiting to put it on things like pension funds, retirement funds, all of that, education funds, they're waiting for that regulation. And just because Gensler said it's a commodity, and a commodity does come with regulation, it still has to be put onto paper. It has to be put into something that is, more legal than just a hearsay. Then, in an interview, Gensler said this. Well, no, it needs to actually be documented. And then Once they have firm documentation on that, then you can see some of these firms start to open up and start to look at adding Bitcoin as an asset to a lot of these retirement and pension funds. Until that happens, it's just not going to happen. Bitcoin is going to be going sideways, or it's going to be, sort of floundering where it's at. I know a lot of people are expecting a really big drop. It could happen. It could go down to 12,000. I don't see, personally, I don't think it'll go lower than 12,000, but this has been a market, I think, that people are not prepared for. Like, we've been through recessions before, but this is different. This is a recession following a pandemic, following record, insane, out of control inflation. So we had a whole lot of things all happen at once. So I think as we try to predict what's going to happen now, based on what's happened in the past, I don't think we'll ever have 100% clear picture on that, because this time, and people always say, oh, this time it's different. Yes, it is different this time. And nobody has a clue what it's going to do. Not Michael Saylor, not Burry, not anybody on YouTube. So nobody really knows. We're all kind of sort of exploring this as we go along to see where things are going to go. We can make predictions based on logic, and those predictions may be right, but we're in that area where there are a lot of moving pieces that are not normally in play. So I don't want to call, in a way, the whole thing is a black swan event. It's kind of a larger black swan event. But despite knowing what's going on, as investors, we can be smart. We can make the right choices. We can be not giving into, for example, fear, uncertainty, and doubt, and just sort of selling things at great losses because we're afraid. We can, if you've got high conviction stocks that are deep in the red, there's nothing wrong with dollar cost averaging into them. That is going to, most, I would say 99% of the time, high conviction, good blue chip stocks, you don't have nothing to worry about. Obviously, I can't say 100%. I don't think anybody can, because nobody has a clue how this is all going to end. Tech the free fall in tech should stop. And it will stop, but will it stop for everybody? Well, maybe one big company that we just don't expect go all the way, all the way as in to zero. Could it happen? Sure. Is it likely to happen? No. But at the same time, we've seen a lot of things. If you take a look at crypto, we've seen some people fall that we did not think were going to fall. A big example is BlockFi. Now, BlockFi hasn't fallen. I want to be perfectly clear on this, but BlockFi is in a lot of trouble. Now, I think people who are on the Danter Banter on Wednesday night, I specifically said, if you're in BlockFi, get out now. So hopefully people have listened to some of these warnings. Right now is not the time to be sitting, holding your crypto on exchanges. It's time to be moving them to preferably hardware wallets. If you don't have a hardware wallet, then at least a hot wallet, but just get them off of the exchanges. So with BlockFi, here's the interesting thing. BlockFi, their last evaluation was, well, let me see here. I got it written down here somewhere, 4.5 billion. So the last evaluation for BlockFi was $4.5 billion. That's with a B. That's a lot of money. Now they're at a point that FTX is looking to buy them for 25 million. 25 million. Look at that. They have fallen. And that's the whole thing. If FTX didn't buy or it doesn't go, if this sale didn't go through or doesn't go through, BlockFi is done. They're it's all of that liquidity and all of those exchanges that provide that provide you all of this extra interest on your crypto. Well, what they're not telling you is the reason they're giving you, maybe 10% on this coin is because they're then loaning that out. So they're loaning all of your coins. And when they loan your coins and then whoever's borrowed that, maybe they're staking it and getting things loaned. I mean, it gets to this point that it's almost like fractional reserve banking, but with no legal safety nets and no law saying that they have to hold 10% in reserve. And because they're so much smaller, it's incredibly easy for things to get completely out of control. And that's what we see happening. So when everybody decides they want to pull their crypto at once, that exchange is not going to survive. We've already seen it happen to Celsius. I mean, Celsius right now they're sort of in limbo. I hate to say it. I don't think people are going to get their money back from that. Now we also had, interestingly enough, Robinhood. So this whole thing with FTX right now seems to be the only super stable one out there. Like, they're growing. Just from a simple rumor that they were interested in Robinhood broke out, and Robinhood went up 14% their stock last week. Of course, they then tanked as soon as the CEO of FTX said, yeah, that's just a rumor. It's not true. So that's kind of an interesting thing as well. Now, also earlier in the week, I don't know if you guys have heard of Three Arrows Capital, but Three Arrows Capital, they had two loans worth about $670 million. But they have now, and they're a crypto hedge fund, they were not able to meet those loans, and they have now they've now fallen into liquidation. So we're seeing more and more of that. Now, the friggin' Oracle is saying, that's the beautiful thing about DeFi. They normally don't lend out funds. Yeah, lending out funds is bad. FTX is buying all the bad loans and the companies. Yeah, they're gobbling them up. But now here's that thing. If you start gobbling up bad companies, you're picking up a lot of bad debts all on your own too. So FTX seems to think that they can handle it. Hopefully they can. Right now, there's no indication that they can't. So it's kind of an interesting thing. And it's one of those things to keep watching. So far in Canada, though, most of our exchanges, they look pretty solid. I haven't seen any inklings on ShakePay or Wealthsimple when it comes to their crypto. Newton, even CoinSquare, they all look to be pretty solid so far. But nonetheless, before Celsius fell, they look to be pretty solid too. So here's one of those things. Even ShakePay, 100% believe them. I don't think they're going out. I think there's a 99.9% chance everything is safe there. But if it's only a 0.1% chance that it's not, to me, that's enough in this current market. And I've always said that if we go into a bear market, I'm vacating the exchanges. Things are going on to the hardware. And, that's where everything is right now. Bitcoin is all on this baby here. That's a ledger. So that makes a lot of sense. It's the safer bet. Now, for you guys out here, are you guys, I hope you guys are all on hardware. Are you on like hardware? I know I did a poll last week, and I was actually surprised at how many people weren't on hardware. There was quite a few, though. There was more than if I had done the poll about 2 months ago. I imagine it wouldn't have been as high. So, if any of you are not on hardware, what's your reasoning? How safe do you feel where you're at? So that'd be an interesting thing to know. If you guys want to just drop that in, that would be kind of cool. All right. And then we're going to jump over to our next topic. This is a short one. It's Armageddon, just because I love the sound of it. So everything with the airlines is still absolutely in turmoil. Air Canada, they are canceling about 154 flights every day. Now, luckily, I mean, they're still flying. At least their shares are still flying, although those shares are not flying upwards, they're flying downward. I think in the last week, their share price has dropped about 6%. So Air Canada is definitely getting down there. And it's funny, probably a year ago, if any of us were like, looking for a good buy-in point for Air Canada, we're definitely below that now. And I don't feel like it's a good buy-in point. Personally, I'm going to stay away from Air Canada for now. I may change my mind once things look a little bit better, but right now, I don't think I think there's a lot better plays out there in the recession than Air Canada. So that's kind of one of those things. And Trevor says I will be. So I imagine that means you're going to be going on to hardware. Good for you, Trevor. Always good to protect your stuff. All right, now. Oh, also I guess we're still on the Armageddon. So the Armageddon, this is not even just a Canada thing. It's also the U.S. A lot of different flight issues and problems, and that's just absolutely ludicrous. So I know my mom actually flew to Texas on Canada Day, and she made it luckily, but she had a couple of points where she thought she was going to miss connecting flights just because of some of the chaos in the airports. Now Ron here says, I saw this morning that if Russia cuts oil production by 3%, oil will go to $190 a barrel. What oil plays would you recommend? It's a good question. Here's one of the things. Earlier in the year, you could have pretty much taken any oil stock, threw them on the wall, and threw a dart at them and made money. And we're moving into that point now that with a recession coming, I think there's still a lot of money left in oil. So I'm thinking, though, about after the recession as well. So what I'm looking at is, okay, which oil companies do I think are companies I would still hold if we weren't in an oil boom? And that's what I'm kind of limiting myself to. So, for example, companies like Enbridge, Turlamine, even Suncor is not so bad. These are the ones I'm thinking about. Also, when it comes to ETFs, XEG, I still have a lot of faith in XEG. That I think is a nice solid one. It has made me a fair amount of money over the last year through the boom. But when it comes to the smaller cap ones, a lot of the smaller cap ones, I'm kind of starting to shy away a little bit from them. There's still opportunity to make money with them. I don't want to say that there isn't. I'm just thinking, let's say, for example, the war with Russia and Ukraine, let's just say it ended. Bang. Is it, I would ask myself in that situation, am I holding a company I would like to be holding? And it doesn't matter because they're going to be a good solid play either. So that's kind of where I'm at. Also Fortis. I also really like Fortis too. One of the reasons I love Fortis is they are about to become a dividend king within the next year. So they're a company that I'm pretty sure it's very important to them. I don't think they have weathered many recessions already. I think they're set up to be strong through this recession. And I think they're also going to be, of course, they're going to increase their dividend. They're not going to get within 1 year of dividend king and then just decide to cut back dividends. They're just not going to do it. So they're definitely a safe play as well. So yeah, Fortis, Enbridge, Turlamine, US, Chevron. I like Chevron. So those are just a few. There's also a lot of other big ones like Imperial Oil that are probably absolutely safe. So just sort of keep that in mind when you're looking at your oil plays. When it comes to the renewable side of it, right now is not the time to be investing in renewable unless you're doing it as a what do I want to call it? A sort of a social conscious investment, because if you look in the States, the U.S., the Supreme Court, they've now ruled some things that took away some powers from the Environmental Protection Agency. They used to be able to limit different oil and industry caps. They used to be able to limit how much carbon they were putting into the air. That's all been taken away from them. And currently, with what's been going on with the Supreme Court, and they're also looking at a House that's going to shift very strongly Republican, no doubt. This October. So I think there's going to be a lot less emphasis on the renewable side of things, even though I'm a firm believer in climate change, and I do believe that we should be looking out for things. But at the same time, we're kind of in that situation where it's just not going to happen. And if you look at it strictly, remove all your emotion, remove all of your social conscience, then your straighter up energy is the way to go. Okay, now Lachelle asks, what do you think about AQN and MFC? All right. MFC, I do hold them. I like Manulife Financial. I do like Manulife. I think that they're a solid dividend stock. They're not going to be a huge growth stock. That's if you're buying MFC looking for insane growth, then you're barking up the wrong tree. If you're looking for some steady dividends, they've had a history of pretty good dividends. Not a bad company. They are one of Canada's top 3 financial insurance companies. So that is kind of cool. Now with AQN, so with Algonquin, there's a lot of people who really, really love Algonquin. And I think of the boom, they're definitely safe. I think even long term, they're probably okay. I just feel like, companies like Enbridge or Fortis, I feel a tiny bit safer, and I feel like they're better long-term plays, but it's not by a lot. Algonquin, I think, is still a good company. I don't think it's going to be a company that you would invest in and then 10 years later go, why did I invest in them? So I do see some potential for Algonquin. So not a bad company. They also have a very good record of paying their dividends. So Algonquin, not a bad company. Okay. So, all right, we were talking a little bit about the oil and gas sector. I guess we got off on a tangent, but that's fine because I don't mind. Crescent Point Energy. Holy cow, you guys just want to stay in the oil and gas sector, don't you? I was in Crescent Point Energy for a while, and I think they did really well with the boom, but they were never a high conviction for me. I think they're a fine company. I just don't have enough fundamental evidence on how they're going to weather the recession compared to some of the bigger companies, like Turlamine or Enbridge or Fortis. So they're a company that I rode through, and I think I still have some of them. I've been slowly, when they're in profit, selling them off a little bit, moving them into other oil companies. And I want to be very clear, it's not because they're a bad company. It's because during the energy boom, I got over diversified into energy, but that was on purpose because I saw the boom coming. I knew there was a lot of money there. And sometimes it doesn't hurt to over diversify into something if you can see a clear path to some profits. And that's kind of, they were one of the companies I brought in. So Crescent Point, I brought in for that reason. They're not like I said, they're not a massive cap company. But they are a strong energy play. They have done well in the boom, and they'll probably continue to do well. through the boom. But for a long-term investment, like I said, I still like the bigger companies in, especially in a recession. Hello, Sandra. Welcome to the live stream. All right, so that's kind of interesting. I think we just sort of finished up on the air. One of our favorite little segments that we have every week is what in the banana bread is going on with Elon Musk. We actually do have more Elon news this week. Every week when I start doing my research for this, I'm like, okay, this will be the week that Elon just hangs back and does nothing. And then, of course, he goes and tweets out a picture of him with the Pope. I'm like, what the heck, Elon? So this week, Elon met with the Pope. Nobody mentioned that he met with the Pope. The only reason the world knows is because he tweeted it out. So I was just like, okay, interesting enough. He met with the Pope. Does that mean anything? No, it's just weird. And I thought I would mention it because it's weird. But now Tesla, of course, Tesla is continuing to fall. They have reported a downturn in their sales. So they're at that situation now where I think things are really starting to hurt a bit for Tesla. They are looking at closing one of their offices. So their San Mateo office, they're looking to close that. So they're going to be downsizing that way. And I think we were talking last week about the fact that with some of these supply chains, they've got factories that are sitting there and they just don't have the parts to do anything. So pretty much people are standing around twiddling their thumbs. So that's just one of these things. He's looking to cut some more jobs. He's looking to cut some of the autopilot jobs. So it'll be interesting to see how this is all going to turn out. Poor Elon, but well, maybe not poor Elon so much. It's interesting. Like before, coming into the new year, I think everybody was almost of that opinion that Tesla was one of these companies that was just too big, too popular to fail. But here they are. Once again, it's the tech companies that have been bleeding big time as we move into this recession. And it's going to get worse for the tech companies and for other companies as well. As we've kind of alluded to, and now I guess the theme of today's live stream has been that oil sector, since we've talked so much about them. But they're going to be the ones who, they're kind of, I hate to say that they're lucky there's a war, but that's the only thing that's saving them. Anything happens to the war and they're going to tank as well. It's just, they're still going to be fine. Keep in mind, everything is going to be fine on the other end of this. Like everything will recover. Well, not everything, but most companies will recover. You're going to find a couple of stinkers out there that are just not going to recover. But companies will recover. Those people who have been DCAing into some of the cheaper prices throughout the recession, you're going to be very happy. Now, I've heard some analysts say that, the money you're spending now on the other side of this may very well, you might as well add a zero to that total because that may be where you're going to be sitting at. That's hugely bullish. I don't know if that's the best choice. Can Weed MD seriously? No, I wouldn't call Weed MD a high conviction stock. Just so high conviction stocks are like, well, Bell. I hate Rogers, but they're still a high conviction stock. All your big six banks. So, Bank of Nova Scotia, Bank of Commerce, a lot of your really big oil companies. So once again, your Enbridge, Tulamine, even Suncor. CNR is probably my favorite out of all of my high conviction stocks. And if any of you guys watched the video I did revealing my top 10, I'm currently totally over diversified into CNR, but a lot of that is not that I purposely get over diversified into it. a lot is that everything's been falling a lot faster than CNR, so it's been pushing up the average on CNR quite a bit. But one of the things we're at CNR. One of the things I love about CNR is that they're integral to the actual supply chain, and they're also integral to our resource sector. And these are the type of things that means that CNR is going to, they're pretty much recession proof. Will their price drop a bit? Sure. But they're going to bounce back. Really interesting. Was it last week? I think it was last week. Somebody mentioned to me, or the week before, time is starting to all blend together. They were asking me about the strike. And they said to me, they point blank asked in chat, they said, hey, will this strike on CN knock their share prices down? And I thought about it for a second. And I replied, absolutely. And the opposite happened. The strike happened and the share price went up. I was just like, seriously? But in my defense, if the market didn't turn around a little bit at the beginning of the week before it tanked again, those prices wouldn't have gone up. So, but yeah, it's one of these ones that I definitely love. When will we know for sure we're in a recession? Well, that's a good question, Sandra. The U.S. pretty much is in a recession right now. It's not official. I imagine once those Q2 results come out, it'll get declared pretty quickly. In Canada, even if we scrape by in the positive, we still technically need 2 quarters. So you'd be looking at the end of the year that they would call a recession. But here's the thing. That's not a rule, like a hard, fast rule. Like you can call a recession without the 2 quarters. And that'll be where watching the United States is important. Because even if the United States falls into a recession, Canada and the United States are so tightly wound together when it comes to the finances. So in many senses, we are we're almost like a glorified independent state of Canada. But just because we're that tightly, our economies are that tightly wound. So the U.S., if they declare an official recession, I would call us by de facto I would say that we wouldn't be in an official recession, but I would say that we would be in a unofficial recession, just from the proximity of the states. And as things get bad down there, it's going to filter up here. And, unless you have faith that our current government is going to be able to just magically fix everything, I don't have a lot of faith in the current government. On the financial side anyway. So I think we're going to be in for a little bit of a rough ride. So, and here's the beautiful thing, you're part of a community where everybody kind of knows what's coming, where we're heading. And that's awesome because you're going to be able to make those right decisions. You're going to be able to be prepared. Now is the time to be not going out and getting yourself into any further debt. Now's the time to pay off any high interest debt you have before, we officially move into a recession. Now is the time that when it comes to investment, is not to be investing in penny stocks, not to be taking, riskier moves when it comes to your investing. It's time to start looking at your blue chippers. This is the time that they shine because those are the ones are going to survive a recession. You're going to make your money back. You're going to make a lot of money through the recession if you're just holding. The other thing too is if you are one of these people that you cannot stand to see a red market and it scares the banana bread out of you, well, you need to stop looking at the market then. some people can't handle it. And some people, and my mom is one of these people. My mom is one of these people that if she were an investor and she was looking at the market and it was all in red, she would be like, she'd be selling so fast. It's not funny because some people they just don't have that right psychology to sort of put it aside, to not bring your emotions into it. So that's kind of one of the things. I think that's one of the things that this whole community has been trying to sort of bestow amongst all of you guys, because you guys are all pretty awesome. And I think that a lot of you have been here for a long time now. I'm seeing some names I've never seen before. Like Lachelle. I don't think I've seen Lachelle before. Maybe I haven't seen Ray. But at the same time, it sounds familiar too. But no, I don't think. I would say Lachelle and Ray are, and maybe even Trevor. No, I think I've seen Trevor before. I try to remember everybody who I see in the chat. That's one of the reasons, like, I do enough videos that I really don't need a live chat, but I love the live chat because, doing the live this week version is my chance to just sort of, see some of you guys and hear you guys and give you guys that opportunity to just ask questions. It's like I bring content every week, but and I'll say this again. I said it last week. If I get in here and it's just nothing, everybody is just here and they're just asking me question after question, I don't care if I get through all the content I bring, because it's more important to just, to give you guys that opportunity just to, to talk and to get out some questions and all of that. And here's the interesting things. In chat, I've had requests that have turned into videos. So that's kind of cool. Actually, the PPL deep dive I did on Thursday, that came from about, I think, 3-4 weeks ago in chat. Somebody asked me if I could do a deep dive on PPL. So I said, sure. So it gives you guys just a general idea of some of those things. So I try to do, my best with the feedback that I get here, which is kind of interesting. All right. Now the friggin' Oracle says, got my interest payment from my savings account yesterday, $4. Yeah. Well, that's one of those things. Banks, the big six, will pay you next to no interest. It kind of sucks. So if you are sitting on money, and you're maybe, let's say you've got a stash of money, you're waiting for some really good buys during the recession. Well, I wouldn't sit on that money in a bank, like a regular bank. I would look at, personally, I like EQ Bank. And the reason I like them is their little savings account that they have there, it at least gives you 1.65% interest on it. And that's like, it's calculated, I think it's calculated daily, but they pay you every month. So it's a fantastic place to sit. I mean, it at least gives you a little bit of something, opposed to if you've got money just sitting there. If you're making, like, over at Scotiabank, you're getting, like, I think it's 0.01%, or you're not even getting, or 0.1%. So it's less than 1%. And with that, you're not going to make any money. But even over at EQ Bank, you're still not making a lot of money, but you're making a tiny bit, which is better than making an even tinier bit. So that's just one of those things. Any of you guys who are interested in EQ Bank, just, look at the bottom of any of my videos. There's a affiliate link there. When you sign up to EQ, you put in $100. They give you like $20 free. And they give me $20 free too. So that's kind of cool. It works out for both of us. So that's just one of those little things that you guys can look into if you're looking for a place to park your emergency funds, so you're at least making something. Now, what's really interesting is I know I used to talk about this a long time ago, like places to stick your emergency fund. And I used to have so many people go, oh, I'm just going to stick mine in stable coins. I'm not hearing that anymore. And I'm glad that I'm not hearing that anymore, because stable coins is probably not the place to be sticking an emergency fund. So anyway, so we got roughly 5 minutes left, maybe a little bit longer if the questions start flowing. Anyway, what's coming up this week? So my video tomorrow is a request video. Somebody asked if I could do a video on FIRE. So FIRE is financial independence, retire early. So, and I've got kind of a recession version of it. So that's coming out tomorrow. Thursday, what do we got Thursday? I think my Thursday is 10. I don't know if it's 10, but it's going to be some mistakes that that are things or some regrets that I'd do completely differently. If I had started investing today, opposed to, basically, anyway, I'm totally flubbing talking today. Basically, it's just, things I would do differently because I now know when it comes to investing. So we'll look at that. Next Saturday, we got This Week, the video section again, and we're halfway through the year. So I'm going to look for the top nothing burgers of the first half of 2022. So it's going to be the Nothing Burger Show. So don't worry, you don't have to even bring condiments for that one. And then, of course, we'll be back here again to do the live show again next week. And I'm sure there'll be a lot more in the news because as we get through the week, I think a lot more information is going to start leaking out about how the U.S. did in their second quarter. So, maybe by next weekend, it'll be officially a recession, but it'll be interesting to see what's going to happen. We got a lot of stuff coming up in July. We got rate hikes and everything else. So that is going to be a lot of fun. Another few things I got coming up as well, not next week. I have had a request to do a video on the VIX because a lot of people don't know how to use the VIX. So that will be coming up in the near future. So, bit of a tutorial. I'm going to try it. I'll do a tutorial, but I'll try to see if I can put a practical spin on it to make it a little bit less tutorial with still being a tutorial, sort of like that. And I think I also had a request to do a small cap. Somebody was telling me that they had seen one of the news shows saying that people are looking to try to use small caps to make money in the recession. So I'm going to look into that, do some research, see what I can pull together on that, and see whether that is a good idea or maybe it's a nothing burger. We'll have to find out on that. Yeah, so that's pretty much what I have. And of course, there's the Danter Banter. We'll have that on Wednesday night. For those of you who are not familiar, Tim and Nancy Danter, they have and if you want to find them on Facebook, they're just Tim and Nancy Danter. They have the Danter Banter or Crypto Night in Canada, depending on who they have on the show and what topics they're hitting. That's every Wednesday night, and I'm a component of that. So we get on there and we just talk about whatever. I think last week you pretty much had to come to that show with a tinfoil hat because it was all out there. It was very, very out there. That's cool. I don't mind. I love talking about things that are out there. Yeah, I think that's about it for next week. And there'll of course be a couple of shorts. I try to get content out every day. So on days that I don't have a video planned, I'll try to squeeze out a short for you. Sometimes they're just silly. I think actually I have a silly short that's coming out this week, sort of like that lemonade short, kind of in that vein. Any of you who've seen the lemonade short, you know what I'm talking about. It's one of them kind of funny, pointless ones, but it's fun. So that's kind of a cool thing. All right, guys, I think that's about it for today. I don't have any more questions, so I want to thank you guys all for coming. It's been fantastic. I loved all the oil questions. So they were good. Keep bringing them. In the week, here's the thing. You guys know that I'm here every Sunday. If you run into stuff in the middle of the week and you're like, I just kind of want to know what this is, bring it to the show. Bring it to the show and throw it at me. If it's something really, really, really bizarre, message me on social media and say, Candace, can you prepare just a tiny bit on this? Or use the Facebook group. In the notes below, there are all of the links to my Twitter and to the Facebook group for this community. Feel free in there to post questions. You got a question, post it there. This is my philosophy. If you've got a question, there's probably 3 or 4 other people who have the exact same question, but they're just not asking. So it never hurts to throw up a question in there, and I'll answer it, and get that all settled for you. So, all right, until tomorrow, and definitely check out tomorrow's video. Let me know what you think of the new set. I will be totally curious about that. So until then, guys, it's been fantastic. We've had another wonderful Sunday afternoon, and I will see you guys out very, very soon. Take care, everybody.